Hi, my name is Ryan Lichtefeld, and I'm a faculty member of the Mortgage University, sponsored by Midwest Mortgage Capital. In today's Friday Guideline Update, we will do our best to compare FHA financing to conventional financing, giving you the pros and cons of each, and giving you situations where someone might choose FHA financing over conventional financing and vice versa. We hope you enjoy. FHA versus conventional. We're going to start this comparison by looking at the pros for an FHA loan. First of all, and probably the most common reason that an individual would get an FHA loan is because they want to put a minimum amount of money down. For FHA loans, the minimum down payment is only 3.5%. That's compared with 5% for most conventional loans. Secondly, the guidelines are less restrictive for FHA loans. For instance, individuals can have debt ratios even above 50% and still qualify for FHA financing. They can have credit scores down to 640. And finally, the entire down payment can come from a gift. To learn more about gift funds, you can look at our Friday Guideline Update titled Gift Funds, which can be found on our Mortgage University page. Let's look at the cons for an FHA loan. First of all, they only work for primary residences. Secondly, there is a mandatory 1% fee that individuals must pay no matter how much money they put down when they get an FHA loan. That 1% fee is over and above normal closing cost and goes directly to the Federal Housing Administration. Secondly, they must, on all FHA loans, regardless of down payment, pay monthly mortgage insurance. There's one exception to this last point, and that is if an individual puts 10% or more down and chooses a term of 15 years or less. They do not have to pay monthly mortgage insurance, but this is the only exception. Let's compare that with some of the pros for a conventional loan. First of all, there's no mortgage insurance required when an individual puts 20% or more down. Secondly, if they choose to put less than 20% down, they have options to pay mortgage insurance. An option that has become much more common over the past year is individuals that choose to pay a fee up front in lieu of paying monthly mortgage insurance. Quite often this ends up being a better option for our clients, and they end up choosing this option over the other option, which is still also available to them, and that's paying mortgage insurance monthly until they get to the required 20% equity in their home. The cons for a conventional loan. First of all, there are rate hits. What this means is that rates start to go up for individuals with credit scores below 740, go up again when the credit scores go below 720, and go up again when the credit scores go below 700. The second thing is there are strict debt ratio requirements of 40%. Strict debt ratio requirements of 45%. And finally, they must put 20% down if their credit scores are under 680. Let's now look at the winners when somebody would choose an FHA loan or a conventional loan. FHA wins when a buyer wants to put the least amount of money down. FHA wins when a buyer has credit scores below 700 and less than a 20% down payment. FHA wins when a buyer has debt ratios above 45%. A buyer would choose an FHA loan over a conventional loan if the entire down payment is coming from a gift. And finally, a buyer would choose an FHA loan if they want to put 10% down and want a term of 15 years or less. Here's the situations where we think an individual would choose a conventional loan. If a buyer is putting 5% or more down and has credit scores above 700 and has debt ratios below 45%, they would more than likely choose a conventional loan. Also, when a buyer is buying a second home or an investment property, they would get a conventional loan. And finally, when a buyer already has an FHA loan, because except for very, very special circumstances, an individual cannot have two FHA loans at the same time. Thank you very much for joining us once again for our Friday Guideline Update. If you have any questions about this or anything else involving financing for a new home, please contact us at 314-787-2900 in Missouri, or 618-624-0066 in Illinois. You can also always visit us on our website at www.midwestmortgagecapital.com. Thank you.